Well, welcome back to another market update here with us at Redline Real Estate Group. I'm Darren Langell, the CEO of our company, and I love bringing these market stats here to you every month. Last month, I called our update Winter is Coming, and I wanted to start off first by apologizing because I definitely set us up for a very snowy October and start to the winter months. So my apologize to you. I'll try not to do that next time. Today, we're going to be talking about the sales figures from the month of September. So I made a few predictions and I anticipated a few things to happen. I'm going to walk you through kind of what did happen and a few tweaks that resulted. We normally see a bump in inventory when we go from August to September. And then we also see a little decline, nothing to be worried about, from August to September. And that's what I kind of expected to happen, and that's what I threw out to you all. We ended up seeing a small decline in inventory actually, and it didn't go up. So that was a good news story. This is happy because we've had such a high inventory for so long. We still do, but it was nice to see that that started to drop down rather than go up where it has normally trended in September. But the other side, the flip side of the coin, is we saw a larger than expected drop. Like I said, I wanted a minor drop, but it didn't do that. We actually saw quite more of a substantial drop in sales in relation to last month. So does this mean this is a start to maybe an even more difficult last quarter of the year? Or is it just a little blip? Well, we don't know that yet. I wish I did, but time will tell and I'll be watching and hopefully you'll be listening. We also know something. When our Calgary Real Estate Board releases their stats, they've given us a lot to dive into. But when they start delivering a shorter report to us in terms of kind of the content and the paragraphs that we review as a summary message, when there's a shorter thing there, they know they're running out of things to say. So after I reviewed everything and I run my own metrics, I kind of share the same sentiments. There isn't a whole lot of new to say, but I did find some key items that I found that I want to comment on. So stick with me through this market report so I can educate you best as I can. So let's dig right into the specifics that I'm talking about. So the first one of the key facts, I like to go through three that will highlight things. Number one is this, sales. As my September 2018 sales graph. So as you see this, the sales is showing where that red line across the screen that I always use, we are still showing that year to date, we've had the slowest overall sales in the last 15 years. So the sales story hasn't changed. It's not super fantastic. When we flip over to my next graph, which is our inventory graph, you see now that the inventory, there's a red line at the very top. So we were down on the bottom side for sales. Now we're seeing on the very top for inventory, which means those things coupled together, slowest year-to-date sales in 15 years, highest inventory, doesn't paint a very optimistic picture for us. So that's something to be mindful of as you're entering the market, both on the buy and the sell side. And I'll speak to that later. The second thing I wanted to hit on is the days on market and the overall months of supply. The reason I bring up the months of supply right after sales and inventory is because these two things are directly proportional to each other. So as this third graph shows, the month of supply has got a big, thick, trending upwards graph on the right side of your screen. You see that's a thick mass showing an upward trend. And that is meaning that our months of supply has been trending upwards and upwards and upwards. And it's not just a short spike. Like you see on some earlier timelines like 2016, we haven't hit the highest in the last 15 years, but we're pretty close. But as you see, our graph and the kind of the width of it shows that this isn't changing. This wasn't just a 1 month thing that brought us up high. As a whole, our days on the market and our months of supply is really quite high. It's higher than we'd like to see. And because of the thickness of that graph and the width of it, there's probably no reprieve in sight for the foreseeable future. So that'd be number two. The third thing is pricing. What does all this mean? Is this starting to affect us now when we talk about pricing? we've been very, very resilient for years, and we've held off on any price adjustments as a result. And as I was talking earlier this year, when we keep seeing that inventory is trending up and sales simply aren't keeping up with the increase in inventory, the inevitable is going to happen. This is what I didn't want to see happen, but it is now happening. And we're seeing that our benchmark price year over year and month over month is dipping, is dipping, is dipping. We sit, if you look on the far left side of that graph to the far right side, that's the benchmark price difference from this time last year to now. On an average, we're looking at about $15,000. And that's what this graph is reflecting. So those are the three things I wanted to start with. Sales inventory, comboed with days on market, month of supply, and then third being the price story, what's truly happening there. Now we'll dive right into just a really quick summary of the four different property segments. So detached, apartment, and then the two within the attached market, which is semi-detached and row. And I'll just paint a picture of the things that matter rather than a whole bunch of stats that are going to bore the heck out of you. So in detached, we're continuing to see year over year declines. Sales over 2017 were about 14% off of last year. That's kind of the story we've seen all year long. But the interesting one is we've actually started, for the first month, we've seen a drop in inventory in the detached market versus last year at this time. Hallelujah. It finally happened. Now let's hope that continues to push. Now, overall, the inventory story is still very high, but we finally had a month that this time we saw sellers not hit the market as hard as they might have at this time last year. So good news. Actually, one other thing with the detached market that I found was kind of interesting is the sale price to list price ratio for the month of September actually trended up a little bit. That means sellers were actually getting a little closer to their list price than they were at this time last year, despite that high inventory, despite that low sales number. So that's interesting. So we'll watch that. In the apartment market, this is the one that I've been telling you for all year that we're fighting. It's fighting hard, and it's continuing to do that. Sales numbers in September actually saw just about a 1% increase than last year. Wow, that's neat to see. Now, it's the first month that we've seen that, but it's happening, and that could be, again, helping it fight through the high inventory that we've seen really since 2014 in that market. Now, the attached market, again, it's broken down to semi-detached and row, and they have two different dynamics going on. The thing I wanted to mention is that the new listing inventory in the semi-detached finally slowed up. This last month, it didn't continue to see a huge bump. We only saw a 4% increase over this time last year, which is good because as a whole, that semi-detached market, that infill type market, has an incredible high inventory, which I'll speak to in a little bit. The row housing market, though, this is one that I was saying was doing quite well for the year, but September completely flipped on this. Flipped in a large way. It actually had the largest decrease of all these four market segments, by 22% less sales in that market as opposed to this time last year. That's a big adjustment. It did have less new inventory hit the market, which is, again, the only thing that's really helping it hold. But that was a big change where it was doing really well. And now if we look on a year-to-date spectrum, because September was so awful for the row housing market, it's actually one of our worst segments now all of a sudden. So I'll be watching it to see what the heck happens for the rest of the year. What about all the price ranges from 100K all the way to, unlimited? What is happening and has things changed? I've been telling the story about luxury. Luxury has had a good year. Year over year, it's done better. Now what we're seeing is it's only the markets 1.5 and up that we're seeing having a stronger year than last year. That $1 million to $1.5 million, which might have done better earlier in the year, has now kind of softened, and you're not seeing nearly the sales volume. So it's kind of lumped in with the rest of the marketplace, which is year over year 20-ish% off as a whole. The other thing that's changed this month that I thought I would point out, and I'm hoping it's going to start a trend, and that's the average price band, $450 to $550 range. It actually had one of the best months out of the entire price range spectrum, which is good news. If the average buyer out there and is starting to sell and purchase and have the ability to transition, that's a great news story. Because when you look at a bell curve, that's the majority of the buyers in a market. So I'm hoping this continues. So let's go average price bracket. So specifically, what does this mean for buyers? You've heard a lot of data so far. For buyers, what do you do? Do you buy now? Do you wait for prices to come down? What is the right thing to do? Well, first of all, this is totally dependent on your own housing needs and your motivations and where you're at. But let me go into this for a little bit. The overall prediction from many of the major bank economists are showing that they expect Alberta to remain pretty flat going into next year and probably even into 2020. Yeah, they don't foresee a real impact decline in our pricing as a result. And there are a few positives in the horizon, such as oil pricing continues to trend upwards, and they're even talking $100 oil, if you can imagine it. And there's possible political changes coming both federally and nationally that could also spur some of our economy as well. As a buyer, there is also something else to think about, and that is there's talk of an interest rate bump up to about 0.75%, which is a pretty substantial adjustment that could happen into next year. So with that in mind, you're going to see a drop in your buying power. So if you're sensitive to that, not everybody is, but if you are sensitive to an interest rate change, that you're going to want to act sooner than later, and knowing that the prices really aren't going to drop much other than normal seasonal frequent adjustments. Now, on top of this, though, with sellers seeing frustration in their ability to sell, they've heard this story all year long and they've felt a bit of frustration. I almost promise with a Darren guarantee, you'll see sellers simply postpone their new listings till next year because they don't want to feel the pressure of their prices being pushed downward. So as a result, I really do see maybe this September inventory drop is the first indication of this, that sellers are just simply going to wait and you'll have less selection than you do right today. So if you want to jump ahead of the interest rate change, and if you want to take advantage of the best price points we'll see, this is the time to jump into the market. Now for sellers, the talk I've been having about prices holding, if you were listening a little bit earlier, has now changed. Our resilience has kind of started to leave us for this short term, for this next 6-7 months. The inventory story and the lack of buyers is pushing prices down, and this is real. And this is falling every month, and it will for the next 5 or 6 months. There's just no question that that is really what's on the horizon for us. So as a result, if you are going to the market, it's even more important to price really well out of the front, as not only does this market naturally deem your home to be worth less as time does go on, but the market is actually shifting, and month over month we're trending down. So the value that a buyer is going to place on your home legitimately will be real, and there'll be a substantial decline from month 1 if you're on the market into month 2, if you're on the market into month 3. You will actually see the average prices drop. So not only will they deem you less legitimate if you're still on the market, but the market will be softer the longer the listing goes on. So be sure that if you are using older comparables to price your home, that now we actually have to factor in an adjustment year over year. Like I said earlier, that 15K differential, that's a real number that we want to make sure you're aware of as we price your home. For the greater Calgarian, for the 95% of you watching this, you guys aren't in the market. Kind of be thankful. Honestly, be thankful. No, but seriously, the picture isn't overly pretty. Plan to see that next year at this time, we'll probably see a little bit less equity just by virtue of this supply and inventory dynamic that's happening. The upside, though, is maybe you can fight with the city because they're probably going to try to raise your property taxes. And reality is you reach out to your friendly neighborhood Redline agent and we'll be able to show that that simply wasn't what happened into next year. So watch for that. Maybe there's your shining light at the end of all this. So I'm not going to speak a lot about the overall best market segments. There's just a lot of data here that you're just going to kind of go in one ear and out the other. But the one thing I want to mention again is that there's been a drastic difference in the sales to new listings. we've basically seen on average across the detached apartment, semi, and row markets about a 7 to 8% difference from last month. So that would say if a community or a segment of the market was selling 50% of the homes that hit the market in that given month, it's actually dropped now down to about 42. So that's substantial. When you run the numbers quickly, you'll realize it's taken a little bit longer all of a sudden to sell your homes through. Things are going to sit. So that's one thing as a whole. That row market that I talked about, it had a 14% decline in that ratio. So that's where you see it completely got flipped on its head and why it's sitting kind of trailing everybody else now. But the other thing, there is one shining light. And I think we're going to pull up the graph here to show. Look at that. There's 32 different columns on this graph. And there's one where it's showing that year over year, we've seen an increase in actual benchmark prices. This entire graph shows the entire market across all 32 segments is having a year over year benchmark price decline. But that's the north market in the semi-detached market. So say infills or half duplexes, things that aren't condos that are attached, that for some reason out of all, it saw a 2% increase year over year in its overall benchmark price. So that's our shining little light for you today. Let's dig quickly into hottest communities. There's really no hot communities, unfortunately. I said this last month, but we've actually cooled down even from that lukewarm one I mentioned last month. But if I am going to hit on a few, the best performing markets today that I see based on September stats only, not as year to date as a whole, but just very moment in time. Monterey Park, Bennington Heights, it had a good month. Acadia as well, and Rosedale. Those are kind of the four that I would talk about. If we're talking based on sell-through, how many are selling versus the new listings, it's a slightly different graph. It's Bennington again, but Riverbend has popped its head up, and Copperfield. Those are the three. So that's kind of our hottest community segment for the month. I thought I'd do something a little differently. As I wrap up, rather than just summarizing some other points that I made today, I found 3 other points that I thought I'd leave you as tidbits for you to think about. And it might matter to you, it might not. These are niche bits of information that I hope will provide you some value. So number 1 is this. The apartment market is still fighting. It's seen an actual increase in sales September over August. That's fantastic. It's the only market type doing that, actually by quite a lot. And year to date, it is still showing a decline in its overall inventory. But if this continues and we see a little bit of a sales bump over last year, that is probably going to become the best positioned market into 2019. So we'll watch. That's a bold prediction. Not a lot of people have a lot of faith because of how hard the condo market's been hit, really since 2007. But it is fighting, and it's fighting hard. So keep going. Number 2 is back to that row market. The row market has flipped from one of the best to the worst. I was speaking to the row market doing quite well earlier in the year, and it was that little segment that I actually quite enjoyed. But now it's flipped, and it's flipped really quickly. September was not a gentle month on it. It is now showing one of the lowest sales to new listing ratios, along with seeing the highest overall year-to-date decline in prices. So is it just a blip, or will we get back to where we were at some good times throughout the year? I'm not sure. And then third, this one is interesting. If you reread some headlines, you might read from the Calgary Real Estate Board headlines that it discusses that the detached market has had the strongest pullback, meaning it's probably pulling away and maybe not doing as well. But as I read this, it didn't jive with the numbers I was looking at. This is actually not fully the truth. It, as I mentioned above, is that row market. It's seen that huge flip. And the other thing about that detached market is that the sales to new listing ratio remains the strongest across all 8 districts. So it's not doing what that headline that you might read later is. The detached, on the bright side, has had its first pullback in inventory. So that's a good news story that shows it'll probably remain one of the most resilient market types that we have, as it typically always is. So that was, again, another complete market update, a lot of information. Hopefully you took some great value out of it and can share along to your friends. So I can't wait to see you next time and even talk to you sooner if you've got questions about what we're doing or some specifics about your your current market. Now, before I let you go, I want you to know that we're having our client and our past client and our best people grand opening at our new space on October 12th on Friday from 7 to 10. There is links for our Eventbrite all over social media because our realtors at Redline love their social media. So look for that if you're interested in coming. Get your seat because it's filling up fast and we can't fit all of Calgary, unfortunately, yet. Anyways, have a fantastic rest of your Thanksgiving weekend, and we will talk to you very soon.